Good morning, ladies and gentlemen. Welcome to the video conference of Banrisul to discuss fourth quarter results and the year of 2022. This video conference is being recorded and replay may be accessed in the company websites ri.banrisul.com.br/en. The presentation will also be available for download in this platform chat. We'd like to inform you that all participants will be only watching the video conference during the presentation, and after that, we'll start the Q&A session when further instructions will be provided. Before moving on, we would like to reinforce that forward-looking statements presented here are based on assumptions and beliefs of the company's management. These statements may involve risks, uncertainties, and assumptions as they relate to future events and therefore depend on circumstances that may or may not occur. Investors, analysts, and journalists should be aware that events related to the macroeconomic environment, industry, and other factors could cause results to differ materially from those expressed in the respected forward-looking statements. Today, are present in this video conference Mr. Claudio Coutinho Mendes, CEO, Mr. Irene Santana, Deputy CEO and Risk Officer, Mr. Marcus Staffen, CFO and IRO, and Mr. Osvaldo Lobo, Credit Officer. I would like to call Mr. Claudio Coutinho Mendes, CEO of Banrisul, who will start the presentation. Please, Mr. Coutinho, the floor is yours. Good morning, everyone. Thank you very much for joining this call to discuss results of the fourth quarter of 2022 and the year's results. Thank you. So before I start, let me tell you that 2022 it brought profound and deep changes in the bank. It incorporated changes that have been done in the past 4 years, especially the change of our logo that brings new concepts and the new branding for this bank. This bank is a more inclusive bank, a more technological and more sustainable bank now. So this brand that was launched in 2022 is for all of our stakeholders, collaborators, employees, and clients. It shows that Banrisul is tuned in with our time. In ESG, let me tell you that Banrisul had an excellent year in terms of performance. It started being provided with renewable energy. We migrated to the energy market. We started buying from renewable sources only, and we've been using this energy in 100 bank branches. And by 2023, we hope that 100% of the energy used by Banrisul comes from wind energy and also solar panel energy. So the idea is to have Banrisul fully provided with or covered by renewable energy. We also bought certified carbon credit from renewable energy, and we are expect to have neutral emissions in 2023 as well as in 2022. So we received the GHG Protocol Gold Seal, acknowledging all that has been done in ESG. In terms of people management, we completed a new voluntary termination program. So 511 employees will leave throughout the first semester of 2023 based on this voluntary termination program. At the same time, over 270 in IT were open and over 1,000 in other places. So we'll have 2,074 positions in IT and 1,335 in positions in the banking positions. So we'll be renewing our staff, bringing to Banrisul these new employees who will certainly provide the bank with great modernity and productivity. The major highlight of this year is the loan portfolio balance. We grew 19.7%, leveraged by rural credit, especially, which grew in 60%. And we also had growth in corporate clients using BNDES guaranteeing funds. And also, there was 9% increase in the payroll loan. We also had 5 billion in credit underwriting, expressing a growth of 3.1%. And we're still disciplined in terms of credit underwriting. It's diversified, guaranteed credit with several guarantees, such as a payroll loan and also actual guarantees in the case of the rural credit and for corporate loans based on BNDES guaranteeing funds. Rural credit grew 63%, which is impressive, leveraged by lines of costing for soy and corn crops, and PRONAF and PRONAM led with over 60% of credit underwriting approvals. Our crop plan had 7 billion as a goal. We firmly believe we will overcome that. We have 66% granted, and we continue operating with an excellent quality, excellent asset quality with low default, 0.3% in 90-day default. So the credit is still constituted excellent quality. Our default level is 1.6%, is a low, a historic low, and you have 313% coverage for 90 days delays. Excellent qualities, and ASC ratings account for over 93% of our loan portfolio. And we have a very diversified credit. We do not operate with large corporate or corporate only. We are maintaining this philosophy, and in our loan, we have 6.8% with 50 clients, showing how diversified it is. We truly believe that we will maintain, that we'll keep the bank with a diversified portfolio. Our idea in growth in the portfolio will be maintained, and our cost of risk is 2%, and we have 5% in provisioning, in loan loss provisions, which also help us. Regarding the guidance, we will grow from 10 to 15% from the total loan portfolio, and voluntary termination program from around 1.5%, and our ROAE from 11 to 15%. The expected margin net interest income has to do with the repricing of payrolls portfolio based on credits that are being reconsidered since the last year. So we have the adjusted net interest income, which grew 80% if compared to the previous semester, 20% in the loan portfolio, and net interest income 1.2 billion, 11% if we discuss the previous quarter. So the repricing of the portfolio keeps on growing, and we're going to incorporate this. The result for the fourth quarter of this year represent 80% when compared to the third quarter of 2022. And the result of this year is 708 million reais, corresponding to a ROA of 8%. And this margin has been growing gradually. So 10.9% was the ROI of this previous period. Net interest income grew 9% if comparing the 11%, I'm sorry, if comparing the previous quarters. This has to do with based on a stable Selic fee. It's a diversified and low cost. Our cost of CDBs is 25% of CDI, and the total capture is 77%. Oh, fully competitive, and basically it's diversified, and it comes from individuals. This funding comes from individuals based on our bank branches. We continued very disciplined in terms of containing risk. If you look at total risks, they grew 6.7% year to year, but if you exclude expenses regarding variable costs, then we have other administrative expenses, which grew 5.9%. Basically has to do with the inflation in the period, and 6.8% has to do with staff expenses, also connected with our voluntary termination program under the expected for the total costs of expenses in the bank. We have the total Basel uh, index is around 17%. Very comfortable levels with these Basel rates. We believe in the continuing growth of the bank, and we'll be able to maintain the payout that's been practiced so far. Into 2022, we affirmed our strong suits in terms of loan portfolio. We made it grow, leveraged by agribusiness. We also made structural administrative adjustments, which led to savings, and also a modification regarding the rebranding of the Banrisul's brand. We recovered margin from the second semester of 22 to on, and we believe this will keep on the same this year. For 2022, we have an expansion of the loan portfolio, maintaining asset quality, growth of the customer base with greater sales of products and services. We'll continue loan portfolio repricing, with the main driving being the margin growth. We will maintain cost structure under control, even with an addition in staff. Gradual recovery of profitability is expected with sequential improvements. Now I would like to close this presentation of our results for the fourth quarter of 2022, and we open our Q&A. Thank you. Thank you, Mr. Coutinho. We will soon start our Q&A session for investors and analysts. If you want to ask a question, please press the reaction button and then click on raise your hand. If your question is answered, you can then leave the queue by clicking on drop hand. We'll start now our Q&A session. So our first question comes from Flavio Yoshida from Bank of America. Hello, good morning, everyone. I'd like to thank you for this opportunity. I'd like to understand here 2 points. The first has to do with the payroll loan portfolio. This has had a reduced growth in the fourth quarter. Which was the reason for that? And what can we expect for 2023 in this field? Now, my second question has to do with the guidance for margin and cost of risk, cost of credit, and what is implicit in this guidance, especially it has to do with taxes and service fees. Thank you. Thank you, Flavio, for your questions. Our CFO, Marcus, will answer them, right? Marcus, the floor is yours. Hi, Flavio. Thank you for your questions. Well, in terms of the payroll loan, in the last quarter, we had an adjustment in our commercial strategy with our correspondents, and the main deceleration comes from that. And we had a boom in the first 3 quarters of that year, and in the last quarter, we decided to focus on working on our portfolio, our existing portfolio with them, with these correspondents. So it was more of a reaction in trying to work with a basis to try and improve the margin in this portfolio. And then we break, I mean, if you break down in terms of credit underwriting, it goes down in this correspondent, especially to work and gain in stock rate. When you look to 2023, we have our own credit underwriting network in the same magnitude for our guidance for individuals, 2 digits lower. It has a potential, especially when it comes to INSS, because more margin will be released from January on, and then we'll be able to better work with this client. Maybe the main take-home message when you look at the payroll loan is that the driver is that the more we have a pricing project, we can have more income, more revenue. Now, regarding the guidance on service revenue and taxes liquids. Service has to do with what has been done in this year above the inflation. This is a good, this is a parameter. And in terms of taxes, I would say we can expect to have a specific number guidance, but nothing so different. Maybe 18 to 23%. This figure is reasonable, I guess, for us to work with. Thank you very much. I understood. Now we have Matheus Hecke from Artman Investments. Hello, I have two questions regarding credit loan. Rural credit has become more and more representative in the general bank portfolio. This will lead to one of the main growth moving forward. So which is the average rural credit rate the bank has provided in the past few quarters? Do you believe there's space to increase this rate, or is this a credit line that is more competitive with major or higher pressures? Thank you. Now Marcos will answer this question. Um, well, I believe that rural credit performance is in fact outstanding. We can work on this line with a growth above 60% in that year. This growth is a, can be explained by costing areas. We have a regulatory ceiling related to that, and more than the rural credit rate, I would say we could work with spread, which is not so different from what we do with real estate credit spread, 4-5%, depending on the deadline or the type of line or the origin of funding. So if we're going to focus or to try and understand, I would work with this figure. There are pressure, we suffer pressure, but the bank has been growing its market share very importantly during this past periods. And so I don't know, would you like to add something? Good morning. I think another part of our strategy is to focus on family agriculture, small producers, small growers, and average sized farmers, help them grow. And during this period, you can work with client loyalty by providing them with solutions in a supplementary chain. We need to understand their demands and be able to provide to them our supplementary products and have a lasting relationship with this type of clients. Our next question comes from João Paulo from Consultec Engineering. How the bank sees the efficiency rate and how can you improve your performance in this field? Thank you, João Paulo. Marcos will answer your question. Well, I believe we can see the efficiency rate taking into account its two sides, let's say. Uh, in terms of costs, the behavior of the bank was to maintain controlled expenses. Our expenses are under control in terms of staff and other administrative expenses. We are clearly aligned with inflation. And moreover, when you look at staff expenses, they are we have been following the guidance, and we had a change in standards in terms of costs. We wouldn't see a substantial change to compose the efficiency rate. Now, considering the net interest income, as demonstrated in the previous quarter, we had a 11% growth. Somehow, we could have achieved that before, but some aspects of the loan of the payroll loan have have decelerated this. When we look at the payroll loan portfolio, taking into account the picture of the last quarter of the year, roughly 50% of them, 50% of this portfolio is already repricified. So we can work on that. And another important figure, just for you to understand its magnitude and to understand that this is a movement that is not done all at once, is that when you look at our payroll loan inventory, it shows an interesting potential to keep on adding value. So the guidance in terms of net interest income is 19% to 23% robust growth if compared to 2022, but bringing a more clear rationale to the market. When you look at the last quarter, the net interest income, if we annualize this would account for 10% of growth if compared to 2022. And moreover, if you look at the month of December, which was the last month of the quarter, 450 million run in the net interest income, this figure would provide us 15% growth over the basis of 2022. So this number alone. So this is very solid, and there is a potential to grow this margin, a robust potential for 2023. And this is the main driver when you consider the growth in return, the growth of results, in the results for Banrisul. Our next question comes from Eric Ito from Bradesco BBI. Mr. Eric, the floor is yours. Good morning, everyone. Hello, Coutinho, Marcos, and team. Thank you for this opportunity. I have two quick questions. Now, regarding the net interest income you've just discussed, just let me link this with Selic interest rate in Brazil. The market in general, from the third quarter on, had a drop. If you can remind us of this, which would be the sensitivity? Does it grow? Does it fall faster or slower? And my second question is, how do you see the NPL dynamics for this year? Do you expect a growth in corporate clients? But if you think we have a series of company that are facing difficulties, maybe bankruptcy. This is a challenging environment for many companies. So tell us, what do you expect in terms of NPL throughout this year? Well, uh, we can start talking about default, and then later I'll talk about the margin, the net interest income. Okay. Okay. So before I talk about NPL, the portfolio has been growing. We monitor this and we have several parameters of risk to follow performance of crops. For example, as mentioned, our portfolio as a whole, including the agribusiness portfolio, has a diversified character. In agro, we are very focused to PRONAF and family growers, family agriculture business, and medium-sized farmers. So we expect a drop, but a small drop for the next period. Regarding NPL standards of guarantees and operations, it's important to highlight, as our CEO said, we haven't changed or gotten rid of our philosophy, which is to structure operations and have good and solid guarantees. Our strategy to diversify per industry, type of company, economic group, and focusing on having a diversified portfolio has protected us. And we have managed to achieve this default rates, which are good, and we struggle to maintain them or even improve them, get them better. But better than making the portfolio grow is to make it grow with safety. And this is what our results reflect. We are very at ease regarding this issue. Sorry. I think we're safe. The bank has been doing its homework, really concerned with these topics and working pretty conservatively. Ours is a defensive portfolio, as our CEO said. The payroll portfolio is a defensive strategy by nature, as well as in the work with the agricultural sector. We focus a lot on the rural portfolio. Last year, when we had a strong drought, there was no problem regarding rise in default. Uh, we have, in terms of corporate clients, we mostly work with medium-sized and small companies with guarantees. So we believe we are safe, even if there is a storm out there in the market. We believe we are sailing in a safe place, in a tranquil area. Just let me add that we keep on our discipline. We do not work with large corporate clients that could lead to a big default. So we have our risk pulverized, let's say. It's a diversified risk based on our guaranteed loan platform. So we believe we'll be safe. Just the first part of the question regarding the net interest income, this growth, as I mentioned before, it has to do with repricing and the growth of our portfolio. When we consider this line and we think of up to 23%. There is a projection of our estimate of a final Selic interest rate that is going to go down. We work with a figure of 12.5%. So NII will be impacted in around 1%. So almost the totality of this comes from the growth and from the business with our portfolio. Now we have questions from Antonio Moraes, Luis Bonato, and Mariana Pfeiffer. Good morning. Congratulations on your results. Which would be the payout you're planning for 2023. I'd like to see if the dividend policies will be the same in 2023. I'd like to understand more about the announcement of dividends and if you can follow the policy of Banco do Brasil, which announced the agenda for payments for the year, the schedule of payments for the year. Well, our payout hasn't been approved yet, but we believe it's going to be maintained, the policy and the levels of remuneration will be maintained, the levels the bank has been working with historically. I don't see any substantial changes on the horizon, even because if we consider the capitalization basis of the bank, it's pretty solid and pretty safe to keep on growing with at the same pace. Regarding a payment schedule, we will take this idea to be discussed and we will discuss a defined schedule so the market knows about previous schedule and the dates when these dividends will be distributed throughout the year. So we accept the last question of this results video conference, and at the end of the answer, the company will make its final considerations. So we have a question by Eduardo Belmonte from Compound. Congratulations on the results. According to the release, the balance from work-related provisions went from 27% to from December 21 to December 22, with an important rise of 345 million. How do you see this trajectory for the next quarters? Well, we reprecified and made the estimates for work related and labor related regarding collective wage agreements. And we completed this by the end of 22. So we measured the provisions of the individual lawsuits, and now also we've done the same for the collective ones. So we hope we won't have this impact in 2023. We expect to have we expect to come back to the normal period. So this amount, which was high in 2022, which was accumulated, we believe that this amount will not be the same, will not be reproduced in 2023, because we have already made the provision of losses for 2022. I believe we repricified the liabilities. It was included in the balance regarding individual and collective lawsuits, and it has to do with the loan loss provisions that we made. And now it's up to us to treat this stock, to treat this inventory. We made important agreements last year. We can reduce some lawsuits which were mature, and probably this will be the major work of this year, to reduce the stock, to reduce these values, these amounts that can impact our balance. The pathway will also be positive, I believe. If any question has not been answered at this event, Banrisul's Investors Relation team will answer the questions received as soon as possible. Banrisul's video conference has now ended. We appreciate everyone's participation and we hope we have a good day.